A lot of stock traders don't like to use indicators, claiming they cause analysis paralysis and they make the chart more difficult to read. So in today's video, we are going to turn them all off, and I am going to show you how you can build custom studies, strategies, and stock scanners based purely on the price action of the ticker. Every single candlestick provides us with 4 data points: open, close, high, and low. When you create a new study within ThinkorSwim, the default line of code you are given is a variable initialized with a keyword plot set equal to the value of close. What this is going to do is it's going to draw a line on your chart at the current bar's closing price. And that's how easy it is to call in these 4 data points that are offered to you by a candlestick. I could change this instead to be open, and you'll notice how the line adjusts to the opening price of every candle. We could make it high. If I go ahead and hit apply, you'll notice the change, and we can make it low. Calling in those 4 data points provided to you by candles is that easy. Simply type in open, close, low, high. ThinkorSwim will permeate that data into your code directly. There's also a few action functions within ThinkorSwim that you will want to know how to utilize to best build price action studies, strategies, and scanners. The first of which is lowest. This function accepts 2 parameters, first being data type and second being length. So instead of just plotting the low of every candle, let's look at the lowest low out of the last 5 candles. And as I hit apply now, you'll see what that means. What is now being plotted is the lowest value over the last 5 candles, right? Rather than just current candle low. Obviously, when this gets a breakdown here, you get this line for 1, 2, 3, 4, 5 candles before it starts moving up, up, and up, right? And there's also a very similar function simply called highest. So now let's instead look at the highest high point, and let's say over the last 25 candles. Go ahead and hit apply. Go ahead and back out. You will see now whatever the highest value over the last 25 candles has been is the data being plotted on the chart. Let's say we want to build a custom study that draws plots on the chart when the stock is dipping as a dip buy indicator. So I've brought back in our action function of lowest, and we're once again looking at the lowest low point over the last 5 bars. The first thing we're going to want to do with this variable is we're going to want to offset it by 1. Because we want to see, right, if the current bar is breaking down below this value. And if you don't have it offset by 1, you'll notice how this breakdown here, this candle doesn't actually break below the lowest low out of the last 5 bars. It just becomes the lowest low out of the last 5 bars because, of course, it is comparing the data against itself. If I offset this by 1, you'll see now what that means. It's just that it's not painting the lowest low value based off of the previous candle. It will skip that and then paint it on the next candle. So you can now see when we have candles actually breaking down below our dip barrier. So the next step is we need to go ahead and define our condition. So I will initialize a new variable to be plotted on the chart. I'll just name it X, and I'll set this equal to an if conditional statement. If the current bar's low is less than data, which of course we have saved the value of lowest low out of the last 5 bars, then we want to plot at the low of that candle, else we don't want anything to happen, so we'll reference our constant of NaN, or not a number. Now, we're going to utilize a look and feel function called set painting strategy, utilizing dot notation to reference it to our variable that we have named X so that it knows, hey, if X is true, then I want to go ahead and call in the constant of paint arrow up. Now, if the current bar's low is less than the lowest low out of the last 5 bars, then we will plot at the low of that candle an arrow pointing upwards. If I hit apply and I've done that correctly, we should now see, yes, indeed, we are having arrows on the charts where the stock is breaking down below the lowest point out of the last 5 bars. If what I just did looked really cool, but was very confusing, don't worry. I have published all 70 plus of my custom coded studies, strategies, and scanners that I utilize every day over on my website, daytradingstrategies.net. And I am always adding to the list so that you can remain on top of ever-changing market conditions. So there's a link in the description down below. Go check out the site today. Now let's do a few more things to this study to make it way cleaner. First off, I would change my keyword for my initialization of my data variable to define rather than plot, because now that we have the arrows on the chart, we don't also need the lowest low line on the chart in the way. Next, what I would do, I would create a new variable initialized using keyword input. I'll call this length and I'll set it equal to 5. Now what I'm going to do, instead of hard coding what the lowest value we would like to check is, I'm going to code in that variable. What this is going to allow you to do is, from the settings of this study, you can now simply change this length and the plot will change accordingly. It is now looking at, hey, have we broken down below the lowest low point out of the last 10 bars? You can make it 25, etc., etc. Just makes it much more customizable. This indicator works really well on bullish stocks. Hey, stock is going up on a dip, good entrance, good entrance, good entrance. But it doesn't work well on bearish stocks. If the stock is actually coming down hard, you get, of course, a lot of, hey, we're breaking down below the low. But if you were buying these arrows, you would just be getting crushed. This allows us to learn about another action function dealing with price action that we can take advantage of to utilize to manipulate this data to make the indicator work even better for us. And that function is average. So if we come in here and we create a new variable, I'll plot it for now so that you can see what's going on. Then we'll turn off the plot once again to keep the chart clean. But let's go ahead and call this AVG, and I'm going to look at the average closing price over the last 200 bars. If I go ahead and hit apply, you should see now what the average close is over the last 200 bars. Now, is this the same exact thing as a simple moving average study? Yeah, it is. But the point of this video is that we want to move away from studies and just utilize price action. So we're going to use the average function rather than the simple moving average study. So what I'm going to do now is I'm going to change this to a define so that the line isn't plotted on the chart. Then I'm going to add into my condition for when our arrows are plotted and the closing price is greater. Actually, let's do low price. And the low price is greater than that 200 length average. Go ahead and hit apply now. Back out of this code. You should notice here on this stock, once the stock kind of starts dipping really hard, our arrows stop getting plotted. This is just a very easy way to ensure that we are buying dips on the strength and then not trying to catch the falling knife on the backside. And actually, if you wanted to follow best coding practices, you would once again not want to hard code this length in. Let's go ahead and change it to another input variable of MA and call that variable in here as well. And what that's going to do, just like the length of the low dips, you can now change the moving average length as well to adjust for when you want to see stocks either getting above or not getting above that line in order for arrows to be plotted on the chart. So we're going to add to this custom study, and we're even going to attempt to build a trading strategy around it. But next, let's go ahead and jump and make the scanner. Let's run a scan finding us stocks that are currently aligning with our dip buy indicator. So actually what I'm going to do, I'm going to hop in and I'm going to copy all of this code up until here. And that's going to allow me to just be able to copy and paste it into a scanner. I'm going to add a filter. I'm going to add a study filter to my scan. Click on this pencil here into the ThinkScript editor. If I paste this in, I should be able to see, well, first off, I have to end this with a semicolon. Then we should have this working. I don't need this if statement here either. Just now we're plotting low less than the lowest low out of the last 5 bars and low greater than the average closing price out of the last 200. Run this on the daily chart for now. Of course, you could adjust this to any time frame, just like the study will run against any time frame. ThinkorSwim is really awesome with that. You don't have to change your code or anything to have it run on different time frames and different tickers. So first stock on the list, it's actually sorted top down by volume. First stock on the list right now is Amazon. If we go ahead and click on Amazon and go over to the daily, we should be seeing a strong stock currently on a large dip. Now you'll notice the arrow isn't there right now. There is a limitation of ThinkorSwim that it doesn't actually plot the arrow until the open of the next day, because you don't actually know exactly what the data points of a candle are until it's completely done trading, right? So there's no arrow on this yet, but you can tell it is a stock that's above its 200 moving average and below its lowest point out of its last 5. Come Monday morning, as soon as the stock market opens, that arrow will be painted on Amazon. Next one, OKLO, should be another really, wow, the stock's getting crushed, but was a really strong stock, obviously below its lowest point out of the last 5 bars. Let's just look at one more. I think that was BSK, I think it was, if I could type. Maybe it wasn't, maybe it was BSX. Yes, BSX, another strong stock, currently on a dip. So the scanner seems to be working as expected. Once again, all I did was copy and paste in the code that we built on the study. Let's go ahead and start working on a trading strategy built around this study. The first thing I'm going to do, I'm going to once again copy the full study code. On the strategies subtab, hit create. We are now creating a new custom strategy. You'll see that comes with a default line of code that is the add order function, which is where we're going to tell the machine when we would like to showcase our entrances and exits on the chart. And we can actually adjust this code a little bit. First off, we don't need the X to be plotted, so we can get rid of that, change it to define, get rid of our set painting strategy. And also, we don't really need this if statement, just like kind of we did in the scanner. We just want this variable to be true if the current bar is below our dip data length and above our average length. So now we can set our buy order, set equal to the condition of X. I'm actually going to change my order type to buy to open rather than buy auto. If I go ahead now and hit apply, we should see whenever that condition is true, the condition or the strategy will be painting a buy on the chart. And you're seeing buys on the entire chart right now because honestly, don't ask me what I was doing, but in my global strategy settings here, I have allowed up to I think that's 100,000 entry orders in the same direction, which is obviously a little bit ridiculous. But I am going to make use of this field. The way I'm going to play this strategy is I will allow up to 5 orders as long as our conditions are true. So we're going to scale in 2 positions. So as long as we are getting that dip on a strong stock up to 5 times while our buy condition is true, we will enter, 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 and enter. Right now, of course, nothing else is happening, and we can't gather any discernible data from this strategy because we don't have a sell condition coded in yet, right? So let's go ahead and let's define a sell condition, and I'm going to set this if the high is greater than the highest high out of the last 10 bars, offset by 1, of course, and actually, yeah, let's just roll with that for now. So now if I go ahead and add another add order and we do order type, this one's going to be, of course, sell to close. And then we're going to do the variable of sell as our condition. If I hit apply, we should now begin seeing, orders entering and exiting as expected. Let's go ahead actually and quickly turn on the floating P&L study. This is a out-of-the-box available study within ThinkorSwim that will show you the profit or loss on your back-tested strategy. Actually, the strategy looks to be doing pretty dang well. It actually looks to be pretty consistently profitable. Of course, right now I'm looking at SPY. This is the S&P 500. It's basically done nothing but gone straight up since 1993. So let's look at some more kind of bearish stocks. And here's the first example of what I was probably expecting to look at. This is SQ. This is the stock we utilized earlier to showcase hey, we should stop buying the weakness. And it works. Once again, the strategy looks to work really well when it's bullish, but here enters, ends up getting crushed because we don't have a stop loss on this strategy yet, right? It's just buying and it won't exit until there's a bounce. In this case, that bounce didn't come for, how far down is this? For 52%. That bounce didn't come. Of course, we can't be losing 52% in a trade. So let's come up with a stop loss idea. But remember that we are utilizing the average closing price out of the last 200 bars that the stock must be above in order for the strategy to buy the dip. I'll actually turn it back on just so we can get a visual real quick. My first idea for a stop loss is, hey, let's sell if that price closes below this average line. So back into our strategy, let's define a new condition. I'll name the variable stop, and simply is the close less than our AVG variable, which we have initialized with that average closing value. Now let's add a new order type sell to close again, this time utilizing that stop condition. Go ahead and hit apply. You'll notice seems to be working way better. Look at the protection you now get on this trade rather than losing that 50% or whatever it was. And now you still end up landing profitable on this chart. That gives you a little bit of a nice range of bullishness and bearishness to compare against. Of course, what you would do from this point is you would begin clicking through a handful of different stocks in different sectors, looking at how the strategy performs, and then you would optimize, right? Especially utilizing your input variables here. It's like, okay, well, let's test the strategy on a 10 length dip and a 100 moving average instead. You'd run that. Okay, maybe it's better, maybe it's worse. Let's try 25 and back to 200 rather instead. And now look at how quickly utilizing code you get to test multiple hundreds of different data points against your strategy so that you can much more quickly optimize and find what's going to make you the most money. So we built a study, a scanner, and a strategy all around price action, step by step together in this video. If you're interested in this kind of stuff, remember, once again, access over 70 different custom codes on my website, daytradingstrategies.net. Click the link in the description down below and go give it a look. With all that being said, hit like if you learned something, subscribe if you would like to keep learning more, and I will catch you all in the next one.